Yo, what's going on, guys? We made it through another green day. That's 4 in a row, isn't it? Beautiful, 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 beautiful day. And boy, things are heating up, aren't they? A lot to touch into. I want to kind of go all over the place here, but a couple important things. And then some follow-up on something we did a couple days ago. So good job today, boys and girls. Absolutely outstanding. But let's hop right into this son of a gun over here. Here on the GAO.gov, U.S. Government Accountability Office, okay? Federal Debt Management. Treasury quickly finance historic government response to the pandemic and is assessing risks to market function. So this is on the front page of them here, okay? So you scroll down to here, and then you're going to open up here the full PDF of this. Federal Debt Management, Treasury quickly finance historic government response to the pandemic, blah, blah, blah. Something very, very, very interesting on page 56, I believe. 56. Here we are right here. Nearly all market participants and experts we interviewed said that the Federal Reserve's purchase of the Treasury securities were an effective and important action that helped restore market functioning. The Federal Reserve implied earlier asset purchase programs primarily to reduce long-risk interest rates, but initiate the COVID-19 purchase mainly to support Treasury market functioning. The Federal Reserve conducted these purchases to ensure that its other monetary policy actions would be effective and help support the broader economy, given the critical role of the Treasury market for other financial markets. Temporarily changing the supplemental leverage SLR on April 1, 2020, the Fed Reserve Board announced a change to the SLR for bank holding companies to temporarily exempt Treasury securities and deposits held at the Federal Reserve Bank for ratio calculation. This change reduced the cost of this entities and holding Treasury securities at central bank reserves on their balance sheet. The exemption expired on March 31, 2021. Federal Reserve officials told us that they made the decision to address 1. A decline in market-making activity by the broker-dealers and reside with these holding companies. 2. A rise in these firms' cash reserves held at the Federal Reserve due to, in part, to a large-scale asset purchases. Now, finishing up here, our analysts of market data indicates that liquidity and volatility measures for Treasury notes and bonds quickly improved following the Federal Reserve's actions. Market participants, we indeed told us that the Federal Reserve's interventions helped restore market functioning to pre-pandemic conditions by summer 2020. Despite this, several market participants and experts we interview expressed concerns about the extent to which the private market can mitigate future disruptions without continuing support from the Federal Reserve. As we have previously reported, disruptions that significantly affect the combination of liquidity, depth, and safety of Treasury securities could lessen the unique advantage of the Treasury market and negatively affect the demand for Treasury securities. Oofda, oofda. I'll pop that whole damn thing in here for you for your reading pleasure. At the very bottom of that, you can scroll over here to 100 and something pages of absolute mind torture, but very, very interesting. Speaking of very, very interesting, remember we pulled this son of a gun up here. Shout out to Carlos Trades, always on top of things. We pulled this up. It went up $1 billion from when I touched on this yesterday, was it, or the day before? Either way. Oh my God, oh my God, oh my God. In literally 24 hours, institutional ownerships for AMC went up $1 billion. They were at 2.29. I think that was roughly when we touched on it, you guys. Worth of AMC, and now it's at 3.28. We looked last night, the 3/16 date was monstrous. Today there was another 7 or 8 of them in there, I believe. Either way, tons of ducats coming into our beloved AMC stock, boys and girls. On top of everything, the 005 is hit the Fed registry. I think the date on that is going to be 9/11. I mean, it's winding down, and then you got the whole talks of the damn the taxes going up, capital gains taxes. They're going to wrap this thing up by the year's end. But do I know that? No. But I mean, it's too much. It's too much. And then this, you guys, have been floating all over God's green earth, and look who wrote the article. The FUD of FUD, the motley frickin' fool. Now, I've seen a lot of this posted over, this is going to be a fake squeeze or whatever, potentially by this comment here. Will AMC mint millionaires? Few investors believed AMC would reach $72 per share this year. Hence, with enough momentum, one cannot say that $200 per share or even $2,000 per share is impossible. My thoughts on this, a lot of people think, okay, or I've heard, I don't want to say a lot of people, there's been some rumors out there, some posts out there of letting this thing run up to $200 or even $2,000, and then drive it back down. There's no way that that's going to happen. I don't think if this runs up even 200 buckaroos, the margins are going to come a call, and they cannot afford this thing to run up to that. If it runs up $200 plus, it's going to go and go and go until these shorts are completely covered. Just my opinion, not financial advice. Sell when you want to sell, but I don't see mathematically, with all the DD that we have known for months and months and months, that they could get it there and then drive it back down. I don't see it. Either way, it's unbelievable that Motley Fool put this out, but then you notice they got to cover their ass in the article below. However, the effects of the 2020 shutdowns, blah, 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 the fundamentals of the company, yeah, we know. So, what's the intentions here? Because the old hedge funds are knowing this article got published before we even seen it. So, right? Another beautiful day. We notice a new trend. Remember, we're going up instead of just that complete sell-off that we had for, 4 or 5 weeks or whatever in July. But, yeah, very good day. Consolidated across, ran up, got rejected up at 38, a little over 38 buckaroos. Consolidated in the mid-37s. That was beautiful. Up 4.5%, 4.12% today. After hours was just Dullsville again. But again, you guys, absolutely beautiful. Again, do we even need to touch on this? I know I say it every night, but 66% was in the dark pool, 51.8 million shares out of the 78.4 million shares were traded in the dark pool. And again, we're at that 66%. We know the deal there, but we always got to touch on it, right? Day number 5. Is it day number 5? Over $1 trillion. Market El Busto keeps going up. I think we went up more than we did the day before. $1.053 trillion bills. Yep, 36. 50. 1 trillion, that is. 87. 1 trillion, 87. 1 trillion. And then 998. Might as well have been $1 trillion. So, Jesus, you guys. Not exactly AMC related, but a lot of this is. The market is about to busto. And that means AMC go Muno. Oh, you guys, this is good to see. The last few weeks have been kind of rough, the calls and the money, but this has to do with a lot of recent activity. $104,000 at the given price right now of $33.44. $104,000 in the money. We hit 38. There's plus 12,000. Yeah, good to see. Good to see, and that I expect that to pick up towards the end of the week here, right? Let's turn of the day. I got 2 turds of the day. We're going to combine them in one because they both have to do with our favorite hedge funds, Melvin and Mr. Kenny G. God dang it, that's a freaky looking picture right in our grill. Jesus. I apologize, folks. Look at this. This cracked me up. Donald Trump casually accuses Ken Griffin of hiding money for standing him up. Okay? Older article, January 2020. Listen to this if I can get through it here real quick without laughing. As we all know, the Trump White House is a leaky place. So who gave Ken Griffin the heads up to make himself scarce from Washington, D.C.? yesterday is he wished to avoid an unwanted shout-out from the unwanted source. Things got a little awkward when at one point the president name-checked Illinois' wealthiest resident, Kenny G. Citadel. What a guy he is, okay? Of course, this being Trump, he hadn't bothered to check that Griffin had actually shown up or not, right? According to Citadel, he hadn't, and in spite of Trump's aide told Thornton had made clear he wouldn't. Of course Kenny G's not going to show up. And this being Trump, he wasn't going to miss an opportunity to take a few petty shots at someone who snubbed him, right? Where are you, Ken? Where the hell is he? He's trying to hide some of his money. That sound familiar, guys? Look, he doesn't want to stand up. Where the hell is Ken? Before, he finally added, he's very quiet about it. He's in here someplace. He just doesn't want to stand up. That was about it. I thought that was pretty damn funny. So Kenny G, I don't think he's much of a public man, as we know, and I think he probably would want to stand out of not go to the White House, right? Our boy over here, old Plotkin over here, this handsome fella, right? There are 10 stocks Melvin Capital is betting will help it recoup losses from its monstrous GameStop short squeeze that cost it billions. And then he had to have Kenny G over there and float him a couple $3 bills to keep him afloat. But now let's take a look at what Melvin, they've been kind of quiet under the radar since their little, the hearing and the little bailout by Kenny. But let's see what these fine folks are up to over here, right? Okay, so 10 of them are going to help him bail out. Now he has Amazon call options. Total position, 172 million. Percent of funded, 0.99%. Okay, Amazon, not a bad place, sir. Target. Position value, 175.2 million. Percent of fund, 1.01%. Allen Technology Call Options, ALGN, ticker symbol. Position value, 213.9 million. Percentage of the fund is 1.23%. Laboratory Corp Call Options. Of course, he's got hey, at least they're playing call options and not going the other way. I maybe think he learned something by that. He's got himself a $220 million position over there with them fine folks. Microsoft position, 243.8 million. So I think he just has some shares over there. Okay, we're playing it safe. We're conservative. We don't see any shorting here. Oh, Domino's, sure. Position value, 244.9 million buckaroos. PayPal, okay, there's a good safe one. 291.5 million. Wonderful. DoorDash, another outstanding company. 329.9 million. Number 2, Expedia. Okay, we're playing it safe here, boys. Plotkin here has learned his lesson, it looks like. So he's got himself 376 million Expedia. And number 1, JD.com, stocks and call options. So, hey, maybe he's turned the corner here. He's like, whoa, I'm staying away from shorting. Did we see any short positions? We didn't. Oh, for Christ's sakes. Good job, buddy. I'm proud of you. Proud of you, sir. Well done. Just tell your buddy over here to cool his jets down there, Kenny G, with them evil, gray, see-through, ghostly eyes. Jesus, he creeps me out. Okay, guys, we've got momentum out the ass. The chart is looking outstanding. We got news kicking in. We got institutions buying like savages out there. Everything is rolling. No dates. Everybody stay calm. Stay away from the charts. Set yourself an alert, maybe above $45, $40, and enjoy the rest of the summer. We're almost out of damn summer, you guys. It's going to be raining sideways up here in Seattle in the next few weeks. So, yeah, good job, you guys. Be proud. I'll talk to you later. Bye-bye.